most favored nation clause. Now, what happens is that, there are two countries, let's say X and Y, right? The way these treaties are structured are a lot more dependent on the relationships which one country has with the other and respect for international laws rather than going strictly by the law or what is there in some other treaty. Most favored nation clause, the purpose of this clause is that when India is entering into a treaty with some other country, if they have good relationships, then India can agree that if today I enter into a treaty with you, which contains some clauses, but tomorrow I enter into another treaty where I give some benefits to someone else, I am going to extend those benefits to you, effective from the date when I give those benefits to someone else. And for that, I don't need to come back and renegotiate or re-sign the treaty with you. Those will be automatically applicable in your case. So let's say, for example, India enters into a treaty with country X, which contains a clause relating to royalty and FTS. Subsequently, India enters into a treaty with country Y. And the rate of royalty taxation, so let's say the rate of royalty taxation here is 15%. In this new treaty that India has entered into, it says the rate of taxation will be 10%. Or there's a restrictive coverage of FTS, right? So let's say, for example, it says that, FTS will be taxable in India only when it is satisfying the make available condition, something which we discussed earlier, right? In such a case, if the original treaty which India had with country X had a most favored nation clause, then the reduced rate, which is 10%, or the narrow scope, which is make available clause, shall also apply to treaty with country X. And it is going to be applicable from the date of new treaty, which is the date when this treaty comes into force, not from the date when original treaty was entered into. Normally, the MFN clause is found in the protocol to the treaty. Let's look at one of the MFN clauses. If after the signature of this convention, which is the treaty between India and Netherlands, under any convention, any treaty or agreement between India and a third state which is a member of the OECD, which means that if India enters into a treaty with a non-OECD country, okay, and that contains some better clauses, those will not automatically apply here. It's only a treaty with the OECD countries. India should limit its taxation at source on dividend, interest, royalty, FTS, or payment for the use of equipment to a rate lower or a scope more restricted. So in respect of any of these payments, if India enters into a treaty with a third state which is a member of OECD, where the rate of tax is lower or the scope of taxation is limited in India's favor, then the rate or scope provided for in this convention on the said item of income, then as from the date on which the relevant Indian convention or agreement enters into force. Which convention or agreement? The convention or agreement with the third state. The same rate or scope as provided for in that convention or agreement on the said item of income shall also apply under this convention. Right?